Welcome back. Thanks for joining us. Breaking news. Is it good for our home buyers here in Canada, or is it still going to be a broken system? Josh is joining us to talk about what the government of Canada has announced last week and is going to fill us in with what the plan is and how it's going to help us. Josh, thanks for joining us. Can you fill us in?
Thank you, Jay. So, as always, this is new news. It's exciting, but I don't want to overhype the excitement. It is a good thing, and it will make some positive change here in Canada. And the big headline news that happened is the federal government announced that they're bringing back 30-year amortizations for high ratio insured mortgages. That means people putting 5% down can now have access to 30-year amortizations once again. We know that about 10 years ago, they scaled that all back down to 25 years because it did help increase home prices back in the day. But this is a more targeted measure. It's not going to be available to everyone. It is specific to first-time home buyers and specific to first-time home buyers that are purchasing a brand new home. So you can have as little as 5% down payment. As long as you're buying a home that's brand new and you're a first-time home buyer, you can extend out that amortization to 30 years instead of only 25. And that will allow you to qualify for a little bit more home. And all of this begins on August 1st here, 2024. So when we talk about the increased affordability, Jay, really to give an example, I kind of went a little bit on the lower side for a household income to give this example. But if we have, say, $80,000 of income in a household, what that's going to do at a current rate of about 4.99% is it's going to increase how much you can qualify to spend. Because what happens with mortgage qualifying is you qualify for a maximum payment. But now with those extra 5 years, we can have a larger mortgage with the same payment. And so for a family in this situation, that would increase how much they can spend on a home by $21,000. So that's additional purchasing ability. And that, again, applies when they're purchasing brand new homes. It is a targeted measure specifically designed to encourage more home construction, right? We've seen over the last number of years home prices going up. It hasn't been as bad in Edmonton, thankfully, but it has been going up elsewhere in the country by quite a lot, and Edmonton's starting to see that as well. And part of the problem is there's not enough supply of housing here in our country. So if we can encourage home construction, which is why this is only applicable or eligible for those buying new homes, we can hopefully see an increase in the number of homes that are built here, Jay. So I know in Edmonton, we're not seeing as much of or as tight of a market, but I know, Jay, just in the last week, you've been working with some clients that have been putting in offers and they've been outbid, right? They're not able to buy the homes, and it's because too many people are trying to buy each home. So the Parliamentary Budget Office, they estimate that Canada needs to increase new home construction by 180,000 homes each year to get to a balance in housing supply and demand by 2030. Over the next 6 years or so, that'd be about 1.2 or 1.3 million more homes than Canada's already building. In 2023, Canada started about almost 250,000 homes. So to increase it by another 181, that's a 72% increase to the amount of housing starts that need to happen in order to achieve the balance according to that Parliamentary Budget Office. And you know what? I think this will help a little bit, but I don't think it's going to solve the whole problem. It's a multifaceted problem, but encouraging more home construction because by allowing more people to extend the amortization if they're choosing a new home compared to an existing home will help at least a little bit. Will it be enough? Again, I don't think so, but it will help somewhat. We hear in the media about the housing crisis here in Canada. Again, we don't feel it the same way in Edmonton. Our friends in Calgary are feeling it, not as much as elsewhere in the country, but CIBC recently did a survey and they found that 76% of people who don't already own homes are feeling like home ownership is simply out of reach and it's going to be a long time. It's a distant goal, is what many of them are feeling. Thankfully, in Edmonton, people can still buy first time homes. You can get a detached home for about $500,000. So it's much more affordable than elsewhere. But the government is listening, I guess. They are hearing and recognizing that there's a problem in our country, and spurring new construction will hopefully help with that.
Right. And I think builders are a little bit nervous about getting too much going on here as well too, because if they don't have these buyers that can afford the product they're putting to the market, it's kind of a little bit of a risk for them as well, right? So I
That's
think in
right.
Edmonton here, one thing we're going to have to keep our eye on, and I've been watching, is land availability. I think we're good for 12 months, but I don't know if there's going to be enough lots that are serviced for these builders to build on, and that's certainly going to be a problem as well, I think. So that's kind of what we're keeping our eye on. I like that number though, Josh, that $20,000, right? Because if you have a client, and I'm assuming that we can do this with a suited home, correct? If they buy a
Absolutely, we
legally
can.
suited, right? So that $20,000 is the difference between getting a suited home with maybe a detached garage or a suited home with a garage built, right? You know what I mean? Like, so instead of not having a garage, just a pad, that 20 grand should buy you a detached garage,
Yeah,
for your suited home. Yeah. So there
exactly.
is some good things about that for sure.
Uh-huh.
So are you finding though that enough of our buyers have enough money to take advantage of the program?
Down payment, of course, is always a struggle, right?
Right.
Income, credit, and down payment are the three big things. But what this does help with is those who don't have quite enough income to quite get to the price point that they're hoping to get to. If they can find
Right.
that in a brand new home, then it'll help. But of course, yeah, you do still have to have a 5% down payment. Nothing's changed there, and that's been the
Right.
law of the land here for as long as I've been in the industry. Now, speaking of down payment, though, they also announced one additional measure. Most people are familiar with the fact that they can withdraw money from their RRSPs and use that to go toward their down payment. But in some of the markets around the country, the amount of money needed for a down payment is more than the $35,000 that the RRSP homebuyer program has been allowing. So they've actually now increased the amount that can be withdrawn. So those who've done a really good job saving in the RRSPs can now withdraw up to $60,000 per person to go toward a down payment. And so, truthfully, that could also, for those who've been able to save that way, it could help people get all the way to 20% down payment in Edmonton. If you have two borrowers with good RRSP savings, that's over $100,000 in down payment that they could pull from the RRSP. And then, traditionally, with the RRSP withdrawal, after 2 years. So in the third year, you have to begin paying it back into the RRSP to not trigger any sort of taxation on the money. But they've now increased the wait period to a full 5 years. So it's in that sixth year that you would have to start paying it back. And from that point, you still have a 15-year period where you can pay back the RRSP for this now larger amount. And for those buying here in 2024 at a bit higher interest rates, that's great because then the payback into the RRSP can wait until the next mortgage term, which will likely be at a lower rate than we're seeing here in 2024. So that's the bulk of the announcement that we saw from the government. The Department of Finance announced last week, and we're hopeful that that will help with our housing supply problem and also help with the down payments a little bit here.
So for someone who's interested in buying a brand new home right now, right? Like this is not coming for a few months.
Yeah.
Can they start shopping and even order a new home, possibly, and then they're not taking possession until September and take advantage of this program, or how would that work for someone?
They could, but we can't yet get an approval that has a 30-year amortization attached to it. We're still waiting
Right.
on lenders to share their communication about how all of this will work. So
Yeah.
for now, from a qualifying perspective, it's probably still prudent to work with a 25-year amortization rather than the 30. But if that's absolutely necessary, that is a conversation that we could have. But if you do qualify at that 25-year amortization, but you want just a little bit additional payment relief, there's nothing really stopping you from adjusting that mortgage approval after August 1st into a 30-year amortization.
Right. And for those people, there's going to be an advantage, I think, because the amount they save versus the amount that their home's going to rise. between now and when it's built is probably going to be a kind of a nice offset as well. Hey,
Absolutely.
some interest rate will be hopefully drop, fingers crossed, right? And then the house prices are still pushing up. So interesting. So I guess time's going to tell if it's a relief for our buyers or not. We'll keep tracking that down and see if we can find some more data on this to share with you guys as time goes on.
Exactly. We'll keep an eye on this and keep sharing the updates as they come along. Thanks for tuning in again today. As always, please click on like if you liked the video. Please tap there on subscribe and hit the bell so you get notified as we share more of these videos. We're dropping them every single Wednesday, and we look forward to seeing you again next week. Thank you.